Chaps, what we are going to discuss today is how you can get a free, yes, that's right, free. We all love that word free. It just sounds so sweet. I know. But how you guys can get a free black swan hedge on your portfolio. Now, this is extremely important for us option sellers who sell on futures. As you know, we have naked risk, we have infinite risk to the downside, blah, 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 blah. However, this is one of the hedging strategies that I use to counter that. I do have many, as you guys know, but I'm going to show you one today, which is by far the best. There is no hedging strategy better. I don't care what you say. Well, okay, there is one better, and that would be just outright buying a put, but that costs you hundreds and hundreds of dollars. So I'm going to show you guys the better way, the free way. Well, the best free way, if there is. Okay, let's go. So, first of all, what you're going to want to do is any time frame you choose. This works on any time frame, but I am going to go to the higher time frames because I like to have the hedge that lasts longer. So we're going to go closest to 90 DTE. So we'll go here, 87 days out. Now I've already got some positions on here. I've got a 112 on here, but just ignore that. So what we're going to do essentially is we're going to try and buy a put. Let's use, for example, this 4,500 strike put. We want to buy this. It's going to cost us $613. Okay, well, what can we do to make this free? If we don't think the market is going to free fall down anytime soon, but we just want this for some protection in case it does, this is how we're going to go about that. We are going to buy the 4,500 put, and it's going to cost us $613. But then we're going to come down and we're going to sell some puts to pay for this. And what will that look like? Well, if we sell the 4,300 put, and let's say we sell 3 contracts of it, would you look at this? What's happening right now? Instead of us paying to open this position, we are now getting paid $713 because we sold 3 of a cheaper contract and bought 1 more expensive. And the credit we receive from selling these 3 outweighs the one we've bought. So now what we do is we let Theta do its job. We let this contract get decayed. And once these contracts have decayed enough to pay for this one, we simply close these out. In essence, this has been made free. You can usually expect this in about 50% of the time, depending on how many extra of these you sell. Between 35 to 50% of the duration of this contract until you can take these off, and this will be free. Obviously, if you get a big move to the upside, then you'll be able to take these here off sooner. So let's have a look at what the P&L curve looks like while we've got the naked side open as well, while we've got the 3 sold puts. So this is what it's going to look like. So as it stands like this, when the position is exactly like this, before you take off the naked puts, what it'll look like is you'll get paid $730 no matter how high the market goes. No matter how high it goes, you're going to get paid $700 or $770 if you hold it till expiration. Now, if the market was to dump the whole way down to below your bought put at expiration, and let's say you're still holding these, well, look, your max profit is $10,600. Now, it is extremely unlikely that the market comes anywhere near down here. It's way past the 2 standard deviation move in this time. So realistically, 99.9% of the time, in fact the broker's telling us 99.5% of the time, you're going to be able to take these off and you're going to have a free hedge. A free hedge, completely free. So what does it look like once we take these off? Well, let's have a look and see. If we go back to the table, we're going to, once we have closed these and we've only got the 4,500 put left, this is how it's going to hedge your account out. Well, it should be not doing that. What else have we got checked on here? There, that's why. So what this is going to look like is this going to be an infinite upside hedge. Sorry, I just moved that. Let me just try and bring that back. Okay, it doesn't want to go back. Let me just go to here. Cool. So if we look at the P&L now, at expiration, let's say there was a black swan event and we crashed down to the 4,000. In fact, let's say previous market lows, what was that, like 3,600 or so? You'd make $41,000 in this position. $41,000. It would have cost you nothing. Absolutely nothing. So you can let this ride. Okay. That is, in my opinion, the best way to hedge these out. You have some of these positions you let expire with the naked puts. You have some that you build up. You want to try and build a wall, per se, of these puts that you have bought, but you bought them for free. So if we go into the table, now let's look at what the buying power requirement would be for this trade to enter the full thing. This is on ES. You can also do this on MES, and it'd be 10 times the size, or 10 times less of the size, and cost you 10 times less in buying power. So you can see right here, this is only costing $3,400 in buying power. You're collecting $700 in net credit. But our goal is to take these off as soon as we can once this is paid for. You can leave it on longer if you want to grab some more extrinsic and then take them off. That's up to you. So if we look at this on MES, let's see what the buying power requirements are for the smaller accounts. Oh, my tasty trade's frozen. Apparently not. Well, you guys get the point. That's how this works. So I hope you guys enjoyed. Leave a comment, leave any questions down below. I'm happy enough to answer. Discord link is the first link in the description. I'd love to see you guys there. We can discuss this. As you can see, we're still up 6k in a year on the futures. That should be up significantly more next week. We've got a lot of oil positions expiring, and they are all getting pretty beat up at the minute due to the big pullback on oil. But we are still way out of the money. 99% chance we're still going to win those trades, so I'm happy, but we've got a lot of extrinsic to collect. I think we've got about $300 to collect on those, so that'll be a lovely week. Thanks, guys, for watching. I'll see you in the next one.